This is The Gist, the essential podcast for the discerning listener.
Welcome to The Gist. I'm John.
And I'm Mary. It is Tuesday, June 23rd, 2026. We are your smart friends on the go. Let's dive right into the news that matters.
We kick things off with the Gist View. Today we are looking at a huge shift in Washington. The United States Treasury just handed Iran a 60-day pass to sell crude oil to Asian buyers. And they get to sell it for United States dollars.
It is a massive, structural trade-off. Treasury Secretary Scott Bessent wants Tehran to reopen the Strait of Hormuz. That vital waterway handles 20% of all global oil traffic. Washington also demanded access for inspectors from the IAEA. That is the UN's nuclear watchdog.
But let's look at the incentives here. Who actually benefits from this? Right now, it is Tehran. Iran gets to clear a massive backlog of offshore oil. They get cold, hard cash up front, and they get it well before delivering any verifiable nuclear concessions.
Exactly. Washington is paying a ransom to avoid an energy shock. A closed strait means spiking oil prices. Spiking prices could trigger a global recession. But there was a serious catch to this resource flow.
The catch is the precedent. When you pay a ransom, you prove that extortion works. Manufacturing a crisis at a global choke point just became a highly profitable business model. It is a short-term fix with a long-term cost.
Moving to the global overview, let's talk about the artificial intelligence space race. Literally. Elon Musk wants to put data centers in orbit. The pitch? Free solar energy and deep space cooling.
But Masayoshi Son says no way. He is the founder of the tech investment giant SoftBank. He publicly dismissed the idea this week. Son points out that blasting heavy servers into space is incredibly expensive. Plus, you have to fix them when they break. Those transport costs completely wipe out any savings on free electricity.
It is a reality check on resource flows. The artificial intelligence compute race will be won down here on Earth. Speaking of massive costs, Wall Street just set a new record. The CFO of the real estate firm Welltower just landed a $167 million pay package.
That is a staggering flow of wealth to the top. Meanwhile, global financial markets are a bit jittery. Japanese government bond futures, or JGBs, are falling. They are tracking similar declines in the United States Treasury market. There is also skepticism brewing over SpaceX and its high-grade debt.
On the political front, we are seeing structural fractures. A new piece in the Wall Street Journal breaks down the collapse of the United Kingdom's two-party system. Traditional power blocks are crumbling.
We are also tracking severe environmental shifts. The United Kingdom is bracing for extreme heat. Podcasts and scientists are asking if Britain is becoming a permanent 40 degrees Celsius country. That is 104 Fahrenheit.
And in Kenya, rising waters are causing massive flooding. Entire communities are being displaced around Lake Naivasha. Changing climates are violently rewriting the map of safe resource zones.
Turning to the European perspective, let's look at Romania. Their parliament just rejected Adrian Vestia as the new prime minister. He only secured 189 of the 233 votes needed.
This is a major roadblock. The far-right opposition party, known as OUR, deliberately withheld their votes. Now, a vital NATO ally is politically paralysed.
The timing could not be worse. Romania currently has the largest budget deficit in the European Union. They desperately need urgent financial management.
So, who gains from this gridlock? Insurgent factions. We saw this in the United Kingdom recently. The populist Reform United Kingdom Party holds just 8 lawmakers, but they siphoned off enough votes to hand Labour a massive win in local elections last May.
It is a clear shift in systemic power. collapsing centrist coalitions are handing outsized veto power to the fringes. These smaller parties do not need a mandate to govern. They just need enough leverage to break the machine.
Spot on. Shifting gears to the workplace, there is fascinating new data on remote work. The CEPR just ran a massive trial. That is the Centre for Economic Policy Research, a network of European economists.
They studied a Turkish multinational company. The rule was simple: mandate just 1 day in the office per month.
The results were huge. Productivity jumped by 8%. Employee turnover dropped by a third, and service quality stayed perfectly intact.
Think of the physical office like a calibration tool. You do not take your car to the mechanic every single day. You take it in periodically to align the gears and prevent friction.
Great analogy. That minimal in-person time anchors the team. It keeps top talent happy, and it secures the structural efficiency of remote work. It is a total win for corporate output.
Let's wrap up with today's temperature reading. The global climate is hot and highly transactional. Whether it is the United States trading sanctions for waterway access in the Strait of Hormuz, insurgent European political parties weaponizing parliamentary gridlock, or tech titans realizing space is a terrible place for a server farm, leverage is the only currency that matters. Systemic power is flowing directly to those who can either create a choke point or figure out the absolute cheapest way to bypass one.
Stay tuned for the next gist to keep your edge in a shifting world. We remain independent and reader-supported. If you value news free from corporate interests, consider supporting our mission. Thanks for listening, and we'll catch you next time.
The Gist, News Digest, and podcast are entirely written and produced by artificial intelligence. The Gist is out 3 times a day, every day, providing you with a liberal perspective on what to expect next. For more information and donations, visit thegist.online. Thank you for listening.